Hi, I'm Ankur Kapoor. In this video, we'll discuss about why IPOs are bad to invest. I'm not referring to all businesses being bad. I'm basically saying when the company comes with an initial public offering, why it is a bad idea to invest in IPOs. So let's get started. So first of all, let's think about it. Who is playing this game of IPO? There are two players for that. One is the promoter, the one who has started the company, and they might be in operations for years or decades even. But at the end, they have put in all the sweat and hard work, and now they want to create some liquidity for their holdings. The second player we have is an investment banker. Well, an investment banker is someone who actually brings the IPO. In a way, you can say that these are agents who work with promoters for a fee and they help in bringing the IPO to public. So they do all the road shows and the publicity around the company. You might have seen a lot of news around IPOs, but oftentimes that may also be more of an advertisement rather than news. So all that is planted by investment bankers and they have an incentive, and that incentive is simple, which is fee. Where is the investor in this equation? One wants to get money, one wants to get paid. I don't see any investor. Let's say for a certain company, the fair value is 500 rupees per share. Why would promoter want to sell it at say 450 and leave 50 rupees for the investor? They would rather sell it for 550. Oftentimes, we have seen that instead of 500, they are actually selling it for 2000 rupees. So let's see a couple of examples to prove this point. So this is a company which became fairly popular during pandemic. Well, it was popular even before that, but pandemic, I think instead of dealing with anyone, we were dealing with Zomato. And let's see, what really happened with the share price. So the company came with the IPO at 125 on 23rd July 2021, and it was holding up until it crashed to 80. So imagine if you had invested in this company, your capital would have been depleted by almost 33-34%. Now let's see another example. 197 communication. This is for Paytm. So as you can see, the IPO came at 1560. It is currently operating less than 50%. So almost 60% of capital is gone had you invested in Paytm. And think about it, your loss would have been even more had you invested say a couple of days later, say around 1800, then your loss would have been almost 67%. That is huge. There is a reason why SEBI has started investigation against Paytm. The logic around that is you cannot play around with investors' money. However, it is also investors' responsibility to understand companies before they start investing. So there are many set of companies, stable companies, and very new set of companies. We are ignoring the startup space right now. But a company that is coming out with an IPO is also new to the market. There will always be a time to invest in that company as time progresses. And this applies not just to bad companies as such, but even to good companies. In a moment, I'll show you example how it is applicable to even good set of companies. So just to show you, this is Paytm. As you can see, it's the return of capital every single year they are depleting like 30, 40, 50% kind of capital. People may claim whatever they want to with respect to the potential of the company. Unless there is cash flow generation, those businesses are really bad to go with. As we said that you are not part of this game. There is no incentive for the promoter to leave anything for the investor. So that is why it is important to be smart and enter at the price which suits you, not the promoter. Promoter would want to sell at the maximum price. So now we move to the question, when should you invest in an IPO? Well, you should invest in an IPO when you are familiar with the product or service. You might be dealing with the company as a customer or as a supplier, and you exactly know the potential of that company. Well, those are good opportunities for you to get into an IPO. Another area when you can invest in an IPO is when you know the promoters are ethical people and you know that the product is sound and will have a good market. That is also a great opportunity for you to participate in IPO. In case of financial companies, there are a lot of companies that are assisting financial entities. So let me give you an example of one company called CAMS. You might have heard about CAMS. A lot of people deal in mutual funds. They would have seen CAMS emails or might be even using their apps or website. So let's look at CAMS. So CAMS IPO came in October 2020. As you can see, it is a solid company with a very good return on capital. Plus, the growth rates have been phenomenal. It's a cash generating company. Every single year they are generating almost 250 crores. So it was a good company. And I have been dealing with CAMS for many years. So I knew the potential and the low penetration of Indian investors, which will really make a good case for this company. IPO came, it was available at a very good price. My valuation indicated that 1400 rupees was a fair value. We could have invested in this even at 1200, 1250 kind of money during the same period. But then it zoomed and it became 3700. Obviously, this was too expensive. Anyone who would have invested at this price could have exited or at least partially exited at this stage. So when to sell a stock is a separate conversation. We are focused on IPOs here. And then it slided. So it's been almost 1.5 years. And as you can see, even if you had invested initially, yes, in the recent past, there would have been a decline, but still you would have been profitable. And this is purely caused by market euphoria. Whenever the market is fearful, you become active. And whenever the market is too active and euphoric, you become fearful. That's the mantra in stock investing. But this stock would have been a good buy at the initial stage. So as I said, that in case of IPOs, there could always be a time when is the good time to invest. It is definitely not at the start. You can always wait it out and see when to invest. I demonstrated 3 examples. In all the 3 examples, you had an opportunity to enter the price at a much lower one in comparison with the IPO price. So do not get driven by the IPO price as a base price. No, it can fall below that. Often it will fall below that. Maybe you'll have to wait it out to enter into the market, but there will always be an opportunity to enter. So if you have to take a lesson from this video, it will be simple. IPOs are great for capital market, may not be always great for the investor. You can always wait it out and get at the right price. The purpose of promoter is not the investor making a lot of money. It is primarily the promoter makes a lot of money. And you will be wise to wait it out and look at your self-interest. As far as you take care of that self-interest, you will choose right companies and you will choose the right price. I hope I was able to add value to your perspective around IPOs. Thank you for watching.